Hello, my name is Tolu, and I am the Managing Director of the IRS Form here in Houston, Texas, and welcome to episode 5 of Tax Talks. Today, we're going to be discussing the new Biden COVID stimulus. Particularly, we're going to be discussing the child tax credit. Before we get started, I want to remind you to like, comment, subscribe, and share this information to anyone you think might need it because we are going to talk about how you're going to cure a lot of the problems that are going to come up. Let's get started. So without further ado, let's get into the provisions. Now, the child tax credit. Okay, so that is another provision of this very big bill. Uh, so what do you get with the child tax credit? So the child tax credit, I know they're saying that it's $3,600, right? That's the amount that has been really circulating through the media and the Senate and the House. 3,600, but I want to be clear about what that bill, what it's actually provided. Okay, what you're getting is $3,600 for every child that is 5 years or younger, not $3,600 for every child. Okay, you only for every child that is older than 5 years, you're getting only $3,000. Okay, and this is for children age 6 to 17, and the 17 matters because typically in the regular child tax credit, if you have children and you file taxes for years on claiming child tax credit, 16 and 17 years old do not qualify you to get the child tax credit, right? But for this particular bill, they are changing it so that 17-year-olds qualify for the child tax credit. And I also want to be clear about something. There are two parts of this child tax credit, okay? There's a regular child tax credit, and then there's a COVID stimulus child tax credit. So this part here, the $3,600 and the $3,000 for age 16 to, and also the inclusion of 17-year-olds in the child tax credit, those are specifically for the stimulus. The regular child tax credit provisions are going to kick in unless they make this provision permanent. And we will talk later about what you get with how to break down your phase outs, etc. with the COVID part of the stimulus, the COVID stimulus part of the credit and the regular part of the credit. Okay. So who qualifies for the child tax credit? And it's really the same. This is really the same information as the regular child tax credit, with the exception of the 17-year-olds, right? So if you are a U.S. citizen, you as a taxpayer and spouse, actually you as a taxpayer, your spouse does not have to be a U.S. citizen or resident. You must be either a citizen or a resident, okay? And again, your spouse does not have to be you. Your spouse could be, a foreign national. And your income is from $75,000 to $160,000, depending on your filing status on last tax return. And so each child must be a U.S. citizen, a national, or a resident alien. And they must have a social security number, and you must claim him or her as a dependent on your 2021 tax return. And they must be related to you. And they must have lived with you for at least 6 months during the year. Now, here is the difference between the regular child tax credit and this COVID stimulus child tax credit. The COVID stimulus child tax credit is saying at least 6 months. So basically at the halfway point, right, you qualify. But the regular child tax credit says that they have to live, the children have to have lived with you for more than 6 months, which means the halfway point does not get you the credit. You have to have more than the halfway point with the children you are claiming, right? And of course, 17-year-olds are now included only for this COVID stimulus part of the child tax credit, unless they make it permanent. The phase out. Basically the phase out is what the income is that makes you no longer qualify for the for the credit. So again, like we said, there are two parts of the child tax credit. There is the regular child tax credit, and then there is this stimulus child tax credit. So the stimulus child tax credit, right? The phase out applies to the 1,000 and the 1,600 of the credit, and the 1,000 is for the extra 1,000 that you get for 6-year-olds to 7, $2,000 plus the extra $16,000, right? So the $2,000 has its own phase out, and then the phase out, the 1,600 and the 1,000 have their own phase outs, and I mean the 1,000 and the 600 they have the same phase out, but their phase out is different from the $2,000 phase out. Now, so you are going to get the full payment of the 3,000 and the $3,600 if your AGI is less than $150,000 if you are either married filing jointly, a qualifying widow or widower, or if you are head of household and your AGI is no more than $112,500, or you are single single married filing separately, and your AGI is $75,000 or less. And I want to understand. I want to explain what AGI is. AGI means your adjusted gross income, right? So there is all your income, right? Then there are certain incomes, then there are certain deductions that you are allowed against that income that would reduce that income, right? So what is net, so after you remove the adjustment, that is what they call the income that is left is what they call the adjusted gross income, right? So it's income minus certain exclusions or deductions. They're not exclusions, just like deductions, right? So the difference between exclusions and deductions are actual expenses that you've had to pay to get. Those are deductions, right? But exclusions are the actual income that they're saying you don't have to tax. Now they say you don't have to tax, right? As opposed to you don't have to report, because first you report it, then they tax it, right? So you have to report it, let them know you got this income, but then they will let you. Then they will do it in a way that it's not taxable to you. Does that make sense? Those are exclusions. Income that you report, but they do not tax, like the unemployment, right? You report the unemployment, but they do not tax 10,200 of it. And then the deduction are expenses that you actually have to pay money out on, right? So those deductions are the ones that they apply to your income that then gets you the AGI. They remove from your income to then get you the adjusted gross income. So the AGI is adjusted gross income, right? So the income that has been adjusted for the deductions that you had, for expenses that you had, right? So the phase out, now you get partial payment of the 1,000 or the 1,600 of the COVID stimulus portion of the child tax credit if your AGI is higher than those phase outs that we talked about, right? So let's go back to that phase out. So you would get a partial payment if your AGI is higher than any of these. 150,000 if you're married filing jointly or a qualifying widower or widow. and 112,500 if you're head of household, if your filing status is head of household, and $75,000 if $75,000 if your filing status is single or married filing separately, right? So if your AGI is higher than any of these, then you will be getting partial payment, right? And the partial payment is kind of a little complicated because it's phased out in very increments, in smaller increments, unlike the economic impact payment, where as soon as you're over, you just lose half of it, right? This one is phased out in incremental, right? So you're losing a little bit as your income increases, a little bit as your income increases. Right? Until it phases out, right? Until it phases out completely. Now you get zero payment of the extra stimulus credit, child tax credit, if your AGI is higher than the normal child tax credit income limits below. Okay, so here's the normal income limit. $400,000 for married filing jointly, and $200,000 for everyone else. If you're single, married filing separately, head of household, or qualifying widower. And those are your filing statuses. So let's go back to the partial payment. So you're getting the partial payment, right? But you're also getting the $2,000, right? So your total credit will be whatever partial payment you get based on your income, and then plus the full $2,000 of the regular credit. But you're getting zero of the extra stimulus credit if your income is below these limits. Does that make sense? The $400,000 and the $200,000, right? But you will still be getting the $200,000. Excuse me, the $2,000 if your income is $400,000 or less, or $200,000 or less. You're still going to be getting the $2,000, right? So you're not completely cut out of the child tax credit, right? But with this one, so now we're basically back to the regular rules now. So with the regular rules, you get the $2,000 in child tax credit, but only $1,400 of that is refundable. The $2,000 here, these are refundable. These are refundable completely, right? So, and also, I will also get clear on that because I believe that they are completely refundable. And when we say refundable, that means that you can get them back, right? As opposed to non-refundable, where they only apply towards your taxes. So let's say you're getting $3,600, right? And it's non-refundable. Then that means that you only get however much your tax is. So if your tax is $4,000, then you would get all of that $3,600. But if your tax is only $3,000, then you're only limited to the $3,000. Does that make sense? So if it's non-refundable, it only applies towards however your taxes is. So if your tax is enough to cover the non-refundable, then you get the non-refundable credit for 100%. But if your tax is less than the non-refundable credit, then you only get up to your tax. But that's different from refundable credits. Refundable credits, you get them if it's high. If the refundable credit is higher than your taxes, then you will get back the rest of it, right? The difference between your taxes and the refundable credit. But if the refundable credit is not higher than your taxes, then you don't get back anything. Does that make sense? So they both apply towards your taxes, but only refundable credits, if it's higher than your taxes, will you get back. If non-refundable credit is higher than your taxes, you don't get it back, right? So, and that's what the $1,400 here is talking about. Only $1,400 of this of the regular child tax credit is refundable. That means if your credit is $2,000, right? You then $1,400 of that is refundable. That means if your taxes are, let's say, $3,000, right? Then all of this will go towards reducing your taxes, and you will get nothing back, right? But if your taxes is only, let's say, $1,000, right? That means and your but your and your credit is $2,000, right? That means you would get $1,000 back, right? But let's say your taxes are $200, right? That means, but your credit is $2,000, right? That that means only $200 of your credit of your child tax credit would apply towards that tax. That means only that means $1,800 is not applied towards tax, but only 1,400 is refundable. That means instead of getting back $1,800, you will get $1,400. Does that make sense? So you'll be losing the $400. And the same thing if you have zero taxes, right? If you have zero taxes, which means none of the credit goes towards your taxes, right? That means you will lose $600 of that credit, but you would only get 1,400 of it back. Okay, that's the difference there. So again, we're going to be covering more details of this because there is a lot of things to cover regarding the child tax credit. It was more complicated than I thought that it was going to be, and as soon as I realized that, I realized that the IRS is also going to have more trouble administering it, which also means that they're going to start administering it later during, because of course they want to get to the easy stuff, because the goal is to get as much money out to people as efficiently as possible, so that the economy can, it will go towards raising the economy, right? And that's actually, what I discovered before I realized that they were going to, they actually already had a date when they are going to be, that they were going to actually start administering it, right? So how to get the child tax credit, being that it's going to be a little bit complicated. So now only half of it will be paid out in cash, right? The rest will be applied in your 2022 tax return when you file it. So you will only get half of that 3,600 or that $3,000 back. So if you're getting the $3,600 and the $3,000 from the $3,000 for children who are 6 to 17, and the $3,600 for children who are 5 and younger, right? You would only get half of that. So $1,500 for children 16 to 17. And this is 60, that is 16, that it will be 3,600 per child. So if you have 2 children, that would be for $3,000, that would be $6,000, right? So you will only be getting half of that $6,000 in cash, and they will do it monthly. They will do it monthly as a payment starting in July. And the reason it got complicated was because of the monthly. Now the other provisions, yes, they made it a little complicated, but the monthly is what made it even more complicated because the IRS typically they work typically on annual basis, not monthly basis, right? So now they've had this extra layer of complication to it that they're gonna have to figure out, how to do with all of that, and including that, and inclusive of that is also when people have to move, when bank accounts change, addresses change, etc. Right? So they're going to have to figure out how to get the information out to people so that they can easily update their information as soon as it changes. And because of the frequency of the possibility of people moving, right, that also exposes you to more identity thieves, right? So that's something else that they were going to have to figure out how to put guardrails in place to be able to administer it correctly. Because the last thing you want is for them to do it, all kinds, all kinds of, to do it quickly, but then you still don't get your money because it went to the wrong person. So now, in order for you to reduce, to help IRS be able to to administer this quickly and efficiently, you need to do your part. That means you have to update. You have to be very, very strict about updating your address. If you're one of those people that move frequently, okay, then you have to be on top of your game in sending out, in making sure you're updating your account information, making sure you're updating your addresses. Okay. Now you have to cure any social security issues. Okay. Now I understand some people are, you know, you know, yeah, some people are they're changing, the identity theft, they're new babies, etc. Right? So you have to see if the Social Security Administration can expedite this, which I'm guessing it's not going to be possible because they're a government agency, one, and two, a lot of people are also going to be having the same problem. All those people that typically have these kinds of problems are also going to have the same problem that so that means that they all going to want Social Security Administration to expedite their stuff, right? So I mean, I think they will have the room to be able to expedite some things, but expect that they may not have the room, right? So that's something to you just have to make sure to be on top of that. Check your mail every day. If you're expecting a new social security issues, if you need to to be there, if you can be there every day to make sure that they're getting done, do that. File your tax returns on time and accurately. And this accuracy, it also is, of course, is making sure that your 2020 tax return is filed accurately. Okay, as accurate as possible. Again, because of a lot of things are going to be changing, and these things are going to be moving out quickly, right? So, so have and keep records of children that stay with you. Oh, yeah, and this is for because they do require the children to stay with you for up to 6 months, or 6 months, or for at least 6 months. 5 months is not going to do it. 4 months not going to do it. Two is not going to do it. At least 6 months. So you have to have records of them having stayed with you. If you're paying rent, if you're taking them to school, any record that you can keep that will show that those children stayed with you, especially with children of divorced parents, children who whose parents are separated, etc., or children whose parents were never married, etc., or children who are who are who have guardians who are not their natural parents, right? So those are the things that you need to do to make sure that you need to be able to prove that this child did stay with you. And yeah, so typically when you with the claiming of children, because the child, there's a lot of there are a lot of credits, there are a lot of money in claiming children on your tax return, like child tax credit, earned income credit. The IRS the IRS is very, very particular. They're very, very particular about making sure that children who are claimed on tax returns are claimed by their parents. They've become even more strict over the years to reduce the fraud regarding that. So they typically, when you file a tax return, they will review your child tax credit and your children related credits, right? And they will determine if you should have claimed those credits or not. And sometimes they may have, they may have disallowed the credit, right? That is common. So what you need to resolve, and if those children really are your children and you're their guardian, you need to make sure that this problem is resolved quickly. And this is one of the issues that you do have to contact the IRS on. Okay, and there's a form called Form 8862, I believe it is. And if I'm wrong on that form, look up the child tax or the credit disallowance form. Search that on IRS website or Google the credit disallowance form, right? To find that form and see if you can, use that form. If that form will help you to resolve your issues quicker, okay? Because if they disallowed you to claim any of those credits from a prior year, they're going to need that form on your 2019, on your 2020 tax return to make sure that you can claim this credit, right? So use the form if it will help you. Now, again, there's going to be more information on this stuff as the IRS gets, they get their arms around this bill, and so they're going to be this. So the information is going to be changing rapidly, and I've actually already have a couple of updates on some stuff that I've already done, right? So this, and as they come out, I'm going to be getting this information and getting and getting and recording the video on them to be able to inform people on how this stuff is changing. And it's going to range from how the income limits, the provision, like who qualifies, who doesn't, which children qualify, who which children do not, your housing status, etc., your income status, etc. A lot of things are going to be changing. And when you can start filing, when you're going to get it, where you can update information. They might even come later on to provide a portal for people to be able to drop their addresses and drop their bank information. Because of that, I really actually think that's what they should do, because as information, especially because of the monthly thing, because as information are changing, they're going to need quick access to it. Um, so that's why a portal will probably be the best way to administer it. But of course, I don't control the IRS or how they operate, so that would have to be something they would have to decide for themselves, and I can only pass on that information as they do it. So, but I will definitely make sure to be informing you to be informing you guys on what all the changes are, and and each of those provisions, which is the child tax credit, the unemployment, and also the economic impact payment, etc. There's going to be a lot, there. So we're going to be getting updates on those, but also I'm going to be bringing information about new, all the other provisions that we haven't covered, because it is a huge bill. There are provisions for businesses there. There are provisions for nonprofits. There are provisions for real estate folks. There are provisions for different industries, right? So there's going to be more videos coming on all of those, plus updates on the stuff that we've already done, and we'll let you know. So now that is it for today. If you have more, if you find this information valuable, I would like to remind you to please like, comment, subscribe, and best of all, share it with someone who can really use it, because this information, especially the child tax credit, it's a lot of things that can screw people up, that people do not understand about it. Yeah, and thank you so much for taking the time to watch, and I will see you soon in a new video.